What's going on, everybody? You know who it is. This is Austin, aka More Than an Agent, and this is the Real Estate Blueprint podcast here with my Dominicano hermano, Jonathan Soto. Soto, how's it going over there?
Coming on, man. Better than yesterday, man. Every day getting a little bit better and better every day, man.
I'm here for it. I'm here for it. We today's show at least, I actually wanted to take the time, and we're going to talk about, considering the fact that it is still the start of 2023 and we're, definitely still attached to our goals and monitoring the progress and tracking. And one of the big goals, at least for me in this particular year, which some of the guests have come on and talked about, so we have an idea of, it's been definitely motivating and inspiring, but starting to break into the larger commercial deals on the multifamily end is my particular goal for this year, and working with individuals that are looking to partner in order to grow our portfolios. But I actually want to talk about that and the reasons why I'm going to be transitioning into that. I still do like small multifamily, of course, but we'll talk about that in a second. So before we jump into this, please definitely be sure to leave a rating and review. That's how we're able to get the show out. Be sure to like, comment, subscribe. We're on all the platforms. Link it in our IG bios. Be sure to tap in as much as possible so that way we can get this word out for everybody. And, in that particular case, this is exactly reasons why we do this. And, to be inspired by some of our guests that are going into those larger deals, now I'll be sharing my reasons why and so on and so forth. First things first, me and Jonathan have been able to build, respectable portfolios, and, we're always going to be in the interest of scaling. But, and I'm going to challenge you, Jonathan, on this.
Do it. Go for it. Challenge.
But we can't play small forever.
We can't.
We can't play small forever, right? Like, we've done a good job, like, pat on the back, pat on the shoulder, but like, now what's next? Like, now what's going to get us out of bed, in the morning, on that particular level, right? Like, so my challenge to us, especially for you, because I know the reasons why, but like, how long are you going to be playing JV? How long are you going to be playing junior varsity?
Man, it's time. I'm tired of playing JV. It's time for the big leagues.
When are you going to go to varsity? When are you going to go D1?
I'm ready. I'm the coach, and I'm putting myself in. It's time to scale up. It's time to tackle other markets. It's time to feel the fear and still do it anyway. I know when
still do it anyway.
And still do it anyway, because once, of course, there's fear of buying any real estate. 1 unit, 2 units, 3 units, 100 units. We play the smaller multifamily game. We have our profits. We know what makes sense. We know what doesn't make sense. But if we want to scale and really take it to the next level, the bigger units are where it's at. And what is stopping us from doing it? We got a game plan. We took care of the smaller multifamily. We were able to acquire a few here and there. So what is stopping us from creating a game plan for those bigger units and taking action and massive action and even partnering up for even bigger and bigger units? What is stopping us? What is stopping you?
Myself, right? Like, it's the number one reason why, right? But it's cool though, because like, I'm also, putting that energy out there, you know what I mean, by talking about it and making sure that people really understand, like, this is going to be the move for me, because like, it's, like, it's just where it's at, right? So the 5 reasons, and I have 5 reasons.
Before you go to the 5 reasons, let's put the goal out there. What's your goal for this year? How many units?
So to be honest with you, I made it very, very simple, on both the residential and the multifamily end. I want to serve 35 people this year as far as like helping clients, and I want to buy 35 units, right? Like, how is that going to work? No idea. What is that going to look like? No idea, right? That can be, 8 4-families, right? Like that's 32, right? But like it can still in that particular case, like it can still add up like that, or it can be 3 10-unit buildings, plus a 5-unit, right? Like, but it doesn't necessarily matter. But I'll tell you the reasons why I want it to be commercial in the larger buildings. But my particular 5 reasons, right? One, we just started, like we just talked about, as far as like playing big, right? And having that next goal to motivate you. And I've come to realize that it's not so much, it is about the goal, right? And everything that we want from the goal being accomplished, but it's also the person that you become in order to get to that goal. And then at the same time, like the journey of obtaining the goal. Because once you obtain that goal, like you're already on like a goal beyond that, right? So like it's also the chase of it, right? So that is definitely something that, playing big, going to that next level as far as a natural progression in business and what we're doing on the investing in, that's my first reason, right? And now you're getting into more advanced, strategies and so on and so forth, and tactics, and so on, like playing big, number one, right? The second reason is because this is the natural progression of a landlord and a landlord's journey. And the reason why I say that is because most people think that heads became landlords, that we became landlords because we had an ultimate desire to be landlords. And it's like, no one signs up to like actually be a landlord. It's just what we actually gain from being a landlord. And this is just what we have to do. But that is still a technician, AKA the technician, the associate, the employee, like aspect of it. Like that's the first like level. But the reality is that no one wants to stay a landlord at all. But we do want all the benefits of owning like multifamily real estate. So when my second reason is we've now gone from self-employed, right? Like when we talk about the cash flow quadrant, on the left side, you have an employee and you have being self-employed. Most agents, including myself, for the time being, self-employed, right? When you make that transition into the larger units and the commercial spaces, you obviously now have enough income that's coming in order to pay for a property manager, which now you are now running a business versus landlording where you have to like, and you can have certain systems in place. Exactly. So now you're really taking on like running a business and being a real estate investor. Not all landlords are real estate quote unquote investors, right? Like because of the simple fact that a real estate investor gets paid just to say yes or no to a deal. And then they put everything else in place so that way it can run that particular business without them being there, right? Landlord is just one of the steps in order to gain the knowledge on what's needed to be done in order for the property to be ran correctly. So you can know if the property manager is doing their job correctly. But that's the second reason, because now you're really freeing up your time and now you're really taking on the more the passive identity that we all got into real estate to begin with for, instead of semi-passive because we're actively doing the landlording part of it.
It's all about
right?
systems and growing. Yeah, I agree.
So it starts with that and that mindset as well. So that's my second reason. The third reason, and then this is in no particular order. This is just as I was writing this down. But obviously the third reason is definitely for more income, right? Like if we're getting cash flow like this on, on the level that we're at now, right? Then imagine double, triple, quadruple, like those amount of units, right? Like, and how much more cash flow that you're gonna have access to. So it's simple and plain. There's no like nothing special about it. Number three, just more income, right? More cash flow. That's coming in at the end of the day. The fourth reason, which is definitely a big reason because it's a lot easier. The fourth reason is the appraisal or the valuation difference between commercial properties and 4-unit and under residential properties. Commercial properties, and people hear me talk about it a lot, but the value based off of what it can make, like net operating income wise, it's value based off of how much the property makes. Residential does not care about that. Residential only cares about what other properties in the area are selling for. When in commercial, easily raising the rents, if you have 10 units, and that's a small that's a small, large, quote unquote, multifamily. But for 10 units and you raise the rents, $100, or let's say even if you do it 50, right?
500.
You've just created, an extra couple of tens of thousands of dollars worth of equity just by raising the rents, $50. Now take that over, say, a 30 unit, like the equity spread is just a lot more, it has the potential to be a lot more wider, right? Just based off of what the property makes and not what other properties in the area are selling for. And honestly, because of the values that you're getting into with commercial multifamily, that means it's just that like your equity position is going to be a lot more as well. So imagine if you had a multifamily in which, let's take 20 units, right? And the 20 units, each is, pulling in, let's say the medium income is 1,000. Let's say you're in the Midwest and like the income is $1,000 and you bought a 20 unit, right? So $20,000 a month, like gross income, right? And then for the year, what is that, 224? So I think, right? Yeah, 240, excuse me, 240, 240 grand a year. Now imagine, right? Because all that rental income is going towards something and it's going towards your mortgage payments. So imagine over the course of the year, $240,000, depending on where you're at, because obviously, but for simple numbers, 240,000 is going towards your mortgage pay down, which in essence would be an extra $240,000 like in equity because like your mortgage is getting paid down. It's not that easy per se because obviously
Not all of that
you're,
payment goes to the principal,
you're
but
paying
yeah.
a lot more interest in the principal when you're first starting off your loan, but still, right? Like eventually it starts to take over, and eventually like you start paying down your principal a lot more aggressively in the in the later years than in the in the early years. So that alone, you didn't contribute not 1 cent to the mortgage payment, and $240,000 has been cleared. That and even if you say 200 of it was to interest, well, that's a lot. We'll say half. Let's just say half for simple purposes, so the listeners can understand. But 240, you split it in half, right? 120, and at that point, like 120 at least is your equity position, right? Like it took us a couple of years to build up like a couple hundred, in equity, and you're doing that in the course of a year, and then the next year you raise the rents, and the next thing you know, so you can see how that goes off the equity play. So that's another reason why, or that's my fourth reason why. And then the last reason, which is still the same reason why I do it now, but the tax benefits that you're
I was
still going to
waiting for
get.
that one. Okay.
The tax benefits that you're still going to get with owning it now, just a larger unit in a larger building.
Higher
The
depreciation.
depreciation, all of it,
Cost,
right? All
well,
tax
when you
benefits.
come to cost segregation, so you really could have a huge write-off of that with those bigger units.
The whole entire cost segregation like aspect of it.
Yeah.
And for listeners, like cost segregation is an accounting tactic and technique in which you are able to depreciate, right? I believe. Yes. You'll be able to depreciate. I haven't used it before. You're able to depreciate different items, within the house, along with the land, which in essence gives you a lot more things to depreciate, which in turn lowers your overall tax bill. But in those, like I would definitely like be taking advantage of all the tax benefits in that particular case. without a doubt. And obviously when refinancing and pulling out money and doing, bird deals and cashing out refinance the same way that we're doing on the the 4 and under units, you're dealing with just a lot more money, like with a cash out like of that magnitude.
100%.
And it just keeps you, and when I say wealthy, like it just keeps you in charge, time, money, like, and overall, like obviously I'm pretty sure it's in a very, very rewarding experience.
I'm
And
surprised. I'm surprised now. Control wasn't. It probably was. It was probably a mix of some of your reasons, because you
you said
control.
control?
Control, yeah, you control the asset more. You control the rents, control the value. You control.
Oh, yes. It's spread out. It's sprinkled over
Spread
the
out
course of
within a few reasons. Yeah.
like hiring property manager and being able to create that much of an equity difference just by raising rents and focusing on the gross income. And mind you, you don't even have to raise the rents. What if you found a way just to lower the expenses?
Expensive.
Right? It's the same thing. So even if all the rents are the exact same, you don't even touch the rents, but you've upgraded a couple of systems when you bought it, you made some renovations, and now you're not dishing out as much in repairs on a monthly basis. Your your net operating income, your net income, is still going to be, it's still going to be either higher or just at a number that, again, just will still give the property all of its value and more. So that's why I'm putting it out there. It's got to get done. It's got to get done. There's no question about it. And like I'm putting all the other goals out there for this year.
Do it. Let's do it.
We're just putting it all out there and we're speaking it into existence.
Two questions for you.
Go.
Which markets are you trying to acquire these units, as well as how are you going to acquire those teams in those markets?
So excellent question. So right now, everybody knows by now, like I'm a fan of Cleveland. I'm definitely a fan of Cleveland. I may, but with commercial properties, there's not a bunch of commercial properties that are coming onto the market every single day. So I also have to start the process of looking. My tertiary city, but is Atlantic City. And I'm just gonna start with there from now. And they're cheaper, obviously, than like where we are here in New Jersey. And they're a lot more, well, with them being cheaper, it makes it a lot more accessible for and a lot more desirable to out-of-state investors. So that's where I'm going to be starting. And, it's going to happen. And when I say Cleveland, that's just one city, but Ohio in general is where I'm going to be looking to take my talents to that particular city. And that's the main goal. And acquiring the teams, as far as each like investor, or you subconsciously run through, I believe it's about 4 departments, I would say, and that's acquisitions, or doing whatever to get to that point. Acquisitions. 2 is the financing and what you need in order to close the deal. 3 will be the as far as like managing, like whatever you're doing after closing, whether it's something that you can just get up, like is already up and running and you're just putting systems in place, whether you're doing some renovations and got to get some things up to par, maybe it's 75% occupied and doing what you got to do to get it to 100% occupancy. But whatever you're doing after closing, that's that 3rd kind of department, like kind of asset management, I would say. And then the 4th is kind of your like end goal, like what makes it complete. Either it's something that, what makes the deal complete, or like, are you going to decide just to hold it? Are you going to flip it? Are you going to refinance it? Whatever the case, but like that, whoever's managing that particular kind of area, or whoever's the decision maker in that particular area. But, all those particular departments, as far as seeing my agent, as far as like, okay, here we are with acquisitions. I already do have a lender out there. Depending on the deal, will let me know what I'm kind of doing after, or at least those last 2 steps. But my agent, is out there on the grind, and we're on the search, we're on the hunt. And the financing end has to be a little bit more solidified in the sense of, okay, is this something that I'm going to be funding myself? Is it something that I'm going to 1031 in order to, sell property and look to scale that way? Is it something that, all right, if I am going to be bringing on partnerships, are we doing 50-50? Am I going more like the syndication route? And, but that, because there's so many more options, yeah, financing just, there's a plethora of ways that you can get it done. It's just knowing, whatever matches like the deal. But the most important is always going to be the acquisition phase, because everything else is null and void if you ain't got no deals to look at.
How about let's do this? Let's get a weekly meeting for us. Let's analyze 2 to 3 deals a week and put potential offers. That's the only, we got to take massive action. That's the only way.
It offers. I 110% agree. I 110% agree. And then, and that can be done obviously. And just analyzing different markets and being able to tap into that.
Yeah.
So those are my, with like my particular 5 reasons. And it is that time to take it to that next level. The most important aspect, like I said, on the department end is the acquisition side of it. And what am I doing on the acquisition side? Marketing and having the boots on the ground, the agent on the ground, running, searching, and we're doing what we got to do. So
you currently have a management company out there, or
say that again?
Management company, or not yet? Property management?
No, not yet. Not yet. Depending on the amount of units, I don't think I would hire a management company for anything 10 units and under. Or pretty much anything that I've done here, I probably wouldn't do this, like, unless it's a larger building. Like, it just has to make sense financially. If don't get me wrong, anything probably above 15 units, like, I'm automatically going to want property management in there without a doubt. Anything below that, I'll make the decision based off of what that looks like from a net operating income aspect of it. Because you can say, you know what I mean? If you're paying, if the gross rent's at 20,000 and your property management fee is 10%, which is normal, right? $2,000 of it. And that is over the course of the year, 24 grand, right? 24 grand from your net operating income. Like, if you would have just removed the expense of 24 grand and you just create 24 grand of net operating income, like, how much does that increase your the value of the property, right? That's going from 600,000, or I would say it's going from, say, 200,000 as far as like, gross profit, well, 240 technically, gross profit, but with the ability to create net operating income just from removing expense, it's mind-boggling. And the amount of equity, that's not with you doing anything else. So doing that plus raising the rents, like, it can, it's stuff that can happen. So yeah.
Let me be a devil's advocate, but if we want to scale and keep growing, we have to hire that team and the systems to take care of those minor little tasks that's going to pull you away from their growth. So
110%.
would you pay that 24K or not? If you could potentially make 100K?
For the smaller units, like, and I say smaller meaning like probably 10 and under, I don't think so. At least me stationed there, right? So like,
oh, if you're stationed, that's different. If you're
but
in that area,
if I would have buy another 10 unit and had that, like, have 20 units working in that particular city or or state, I'm probably gonna have them. I'm probably at that point, like, we'll start the management, and then whatever I do after will definitely be managed.
Gotcha.
But yeah, it's a very interesting, kind of perspective on it. But getting into that space in general at least offers you a quick, or the opportunity more than it does on the smaller residential end.
Gotcha.
So that's my spiel, man. That's my putting that out there to make it happen, and doing whatever we can to level up and see what's really possible out there.
Let's do it, man. Let's do it. Let's crush 2023. Let's keep at it. Take massive action. Feel that fear, and let's fucking do it anyway.
I'm here for it. This is the Real Estate Blueprint Podcast, signing off.